We're in the middle of a modern-day gold rush, says Politico. And when a source like Politico highlights the soaring demand for gold, it's a sign of just how historic this moment is. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe, and we'll keep you in the know. Central banks don't buy gold to get rich. They buy it to safeguard their reserves. Central banks have been net buyers of gold every year since 2010, when the global financial crisis exposed vulnerabilities in economies and financial systems. But it's the pace of accumulation in recent years that's truly eye-catching. Since 2022, central banks have been purchasing gold at or near record levels. Analysts say this aggressive buying has played a significant role in supporting gold prices. In a recent article, Politico marveled at what they called a new gold rush. Here's the thing. When platforms like Politico start paying attention, you know something big is happening. Politico sees what the experts see. Record levels of central bank demand helped gold reach new highs 40 times last year and maintain its current price of over $2,700 an ounce. They also highlighted why this moment is so significant. As Politico puts it, amid rising uncertainty and fading trust in the global order, central banks are scrambling to stock up on an old but trusty asset. One major driver to this uncertainty has been geopolitics. The U.S. has been using dollar-based sanctions aggressively towards nations they deem not in alignment with their foreign policy. As of now, about 1/3 of the world's nations are under U.S. sanctions. At the heart of the gold rally are central banks, says Politico, especially those who are or fear they could be on the receiving end of U.S. sanctions. But there's more to the story. Politico also points to the failing reliability of the states that built the post-war global financial order. What they're talking about is the mountain of debt weighing down the U.S. and other Western nations. Goldman Sachs strategist Lisa Thomas explains it like this. Many central banks hold the bulk of their reserves in U.S. Treasury bonds, and policymakers may be increasingly concerned about their exposure to fiscal risks in the U.S. This central bank-driven gold rush has pushed prices nearly 50% higher since 2022. Just like the gold rushes of the past, when you see the wagons rolling, it's time to get going and stake your claim. Central banks aren't waiting, and maybe we shouldn't either.